Hello, good evening, and thanks for being with me on Business. The Ghana Chamber of Commerce and Industries has met with some industry players on the best ways to reposition ahead of the implementation of government's flagship One District, One Factory policy. This was the first in a series of such engagements on the One District, One Factory policy. Here's more in this report.
The forum gave an opportunity for the Chamber of Commerce to interact with several businessmen and women on how to reposition themselves for the upcoming One District, One Factory policy. President of the Chamber, Nana Dankwa I, is hopeful the program will not only create an enabling environment for businesses to thrive, but also help them to become more competitive on the world market.
And the Chamber is seeking collaboration with governments, local and international partners in undertaking the necessary research. Our work, without doubt, clarify the value-added part, initiate and sustain value chain governance, make businesses and products more competitive, and encourage more actors onto the chain to create more sustainable.
In an address, Minister for Trade and Industry, Alan Tremantin, said the One District, One Factory policy will create in excess of 1 million jobs. According to him, government has received over 100 business proposals so far, an indication that the private sector is eager to partner government in the policy.
There are 6 strategic objectives for this policy initiative. First, it is intended to create massive employment, particularly for the youth, in our rural and peri-urban communities, and thereby improve income levels and the standard of living.
On his part, Managing Director of the Ghana Commercial Bank, Ansel Ray Soa, revealed the bank is committing 1 billion cedis for the facilitation of the One District, One Factory policy.
Ladies and gentlemen, this is what our leaders had in mind when GCB Bank was formed some 64 years ago. The bank has always provided financial intermediation for national development. I am proud to say that GCB Bank has allocated up to 1 billion Ghana cedis to support the viable proposals under this initiative.
Meanwhile, the Chamber is expected to forward or communicate to government on the best ways of making the policy a successful one come its official launch in July.
Now, the Monetary Policy Committee of the Central Bank has reduced the policy rate significantly. The Central Bank dropped its lending rate to commercial banks by 100 basis points to 22.5%. This is the second reduction for this year after the biggest rate cut of 200 basis points in March. The development could lead to further reduction in the cost of credit in the country. Governor Dr. Ernest Addison said the bank said the move was influenced by a favorable economic outlook for the country.
The committee noted that the pace of economic activity has picked up, driven mainly by growth in private sector credit, improved business sentiments, and easing credit stance. Furthermore, increased oil production from the Jubilee and 10 fields and the coming on stream of further activity in the oil and gas sector from the fields by the third quarter of the year should give added impetus to overall growth prospects. In sum, there is evidence to suggest that economic imbalances that existed at the end of 2016 are giving way to stronger fundamentals, with growth to pick up strongly in the period ahead, although it will remain below potential. The 2017 budget indicates a return to the path of fiscal consolidation. The reduction in the fiscal deficit for the year is expected to foster more stable macroeconomic conditions. Rigorous and steadfast implementation of the budget will therefore be critical to the outlook. On inflation, the committee noted that headline inflation and inflation expectations have broadly trended downwards. The disinflation process has been supported by tight policy stance and exchange rate stability. With a stable outlook for exchange rate movements and return to the path of fiscal consolidation, headline inflation is expected to trend towards the medium-term target in 2018, barring any unanticipated shocks. Given these considerations, the committee judged that the downside risks to growth outweigh the upside risks to inflation in the outlook, and therefore decided to reduce the policy rate by 100 basis points to 22.5%. The committee would continue to monitor risks and take the necessary policy actions to move the headline inflation towards the medium-term target. Thank you very much.
While the central bank governor has added that the bank would focus on industry issues before going ahead to increase the minimum capital requirement for commercial banks.
The issue of the banks that are not meeting the minimum capital adequacy requirements. I should say that, yes, there was an asset quality review that was done at the end of last year, which led to the downgrading of some accounts. And that downgrading process led to a requirement to make more provisions in the banks, which led to the need for recapitalization, or led to a reduction in the levels of their capital. This is why the Bank of Ghana asked those banks, I think there were about 9 banks, to submit recapitalization plans. I should say that most of them have submitted the plans, which have been reviewed by the Banking Supervision Department. There are just a couple of banks that we are yet to sign off in terms of agree on the feasibility of the plans that have been submitted. But I think that there is progress on that issue. It's important for us to understand recapitalization. Why do we need to recapitalize the banks? I think that the recapitalization has become necessary because of weak economic growth, weak credit management skills. So the fiscal, quasi-fiscal activities which impacted negatively on the banks. So these are the underlying problems that we have faced as a country, and we have seen the spillover effects of that in terms of financial sector performance. It's very easy to recapitalize without addressing the underlying problems which led to the recapitalization in the first place. So we could just recapitalize and go on and badly manage things and then come back to the same square one where you have to go back and recapitalize again. If you look at it that way, I think that it's important for us to take our time, not only in announcing what the new capital requirements are. We must be clear in our minds what we are trying to achieve with this whole process of recapitalization.
Meanwhile, economist with Data Bank Courage Kingsley Mate has been sharing his thoughts on some of the issues raised by the central bank governor.
When you cut policy rate, what are you trying to do? You are trying to stimulate lending or growth in loan book. Now, look at the assets of the banks. It has increased to about 84 billion cedis as at March or as at April. Now, we go down to the loan and advances. It shows that it's been flat at 36 billion cedis. What may have financed the growth in assets of the banking industry? Because the loan remained flat due to the fact that NPLs remains high at 20%. So the main interpretation to this, therefore, is that the central bank is probably trying to make liquidity available to accommodate government financing of the budget for this year. Because let's not forget that all the financing of the deficit will be done from domestic borrowings, and if you continue to tighten liquidity, it makes it difficult for government to access funds to finance the deficit. And so at the end of the day, it's just a way of accommodating government's requirement for funds as well as private sector requirement for funds. So a lot will have to be done in the area of lowering the risk premium rather than the base rate, which is affected by the policy rates.
Now, CEO of Margins Group, Moses Baden, has emphasized the need for Ghanaian innovators to continue to leverage ICT to improve businesses. Despite the impact of information technology on various business operations in the country, they still have a long way to go. Moses Baden was speaking at this year's edition of the CEO's Summit, which was held under the theme Digital Innovation Economy for Business Growth.
This age is described by some business people as the age of infrastructureless scaling, which simply means that companies with intellectual property, with good understanding of the digital ecosystem, can scale globally without building physical infrastructure. And I'll give you a few examples. Uber is the biggest taxi company without taxis. Google, the world's biggest library with no shelves of books. If this age does not need the difficulties that we faced in the last 250 years, which is capital, it makes this is our time. This is a time when Ghana and Africa can use our competitive advantage in demographics to advance our cause and to expand our economy onto the level where it's not recognizable.
And that's it by way of business tonight. Many thanks for watching. My name is Emmanuel Apuachi. Have a good evening.